Let's get some analysis now with Greg Newman, the CEO of Onyx Capital Group in London. Welcome to the program, Greg. We know that it's not unusual for global markets to take a bit of a tumble during times of conflict, but it is energy markets right now that are in a bit of a tailspin. We're seeing oil and gas prices soar to record levels as Western powers really look to cut off Russian exports of those commodities. Explain to us, how significant a player is Russia in terms of exporting oil and gas to the world?
Well, hugely significant. I mean, 10% of oil production, more for natural gas. But yeah, it's so well integrated into the global oil and gas trading network. In particular for the EU, they rely on 40% of its imports come from Russia and about 30% for oil.
Yes, and if we take a look at oil prices specifically, as we heard there, they've reached a decade high this week, hitting around $110 a barrel. But when the OPEC Plus group of global producers, which includes Russia, met this week, they've refused to unlock more supply onto the global market, sticking to their initial unlocking of supply post-pandemic. Can you explain to us, do you think there will come a time when those group of producers will be forced to unleash more supply onto the market, or do you think they're just happy to reap the rewards of higher prices, perhaps to make up for the lost revenue during global lockdowns?
Sure. Well, I think at the moment it's just so highly politicized. I mean, they are actually in the middle of a production cut, and it was planned for 28 months, and we're about 20 or so months into that. So there's really no need, in their view, to end that incremental supply increases. But the thing is, when they do get to the end of this 28 months in around September, then OPEC are free and OPEC Plus are free to produce as much as they like, and you've probably got Iranian oil coming back online, and the US would have produced a lot more by that point. So it could come back to market share at that point. But for now, it is ultimately what it is. They don't want the backlash. I think if you deviate from the plan they've set in place, they risk alienating their own members. So I think they're just going to stick to things for now.
And we know Western leaders, led by the likes of the US President Joe Biden, they've been eager to find alternative sources of energy should they decide to cut Russia off completely. Qatar, as one of the world's largest exporters of liquefied natural gas, has been called on. But I'm wondering, if Russia is completely excluded from the supply of oil and liquefied natural gas, might other countries be able to step in and fill that void?
Well, this is it. As I said, there's more OPEC production being expected anyway up until September. And in that time, US producers can now produce as much as they like with no real backlash to their share prices, because it's expected oil prices are to stay high. I think the real issue is going to be natural gas, and you can see that in the price disparities. Oil has responded strongly, but natural gas has responded a lot stronger over the last few months. So really, it's about tighter integration, I think, between the US and Europe for more liquid natural gas exports. They need to build more terminals, more infrastructure to accept this. But the good thing is, LNG has been invested a lot in the last 10 years. And so that investment will come into fruition, and that's likely going to be the response. But as I say, I don't think the oil scenario is going to be too bad for too long. Ultimately, there is enough oil in the world as long as we just keep the production increases going. But at least this has woken up people to make real action and go from there.
And what about the impact on the Russian economy from all this? We know, despite reforms and the changes to Russia post-Soviet Union, it really is still essentially a petro state, a gas state. It relies heavily on those commodities in order to shore up its revenue. What sort of an impact might the cutting off of Russia from global supply have on the Russian economy?
Well, this is what's so interesting. I mean, we haven't actually got sanctions yet, but what's being touted is self-sanctioning. Oil and gas majors and trade houses are just avoiding oil and gas. How we go from there? Really not sure. But the thing is that oil and gas, like in Iran, when they've been sanctioned, the oil does get out somewhere. It's likely China have supplied long-term agreements. They'll continue to get that oil and gas. So it's obviously going to be a lot more going that way. But for sure, it's going to be a huge impact. And it's just whether or not the sanctions go all the way to the oil and gas and really cut things off. And that's when it can get very dramatic indeed. But for now, we need to remind everyone we're not actually there yet. So let's see.
Okay, Greg Newman from Onyx Capital Group. We'll have to leave it there, but thanks again for joining us on Money Talks.
Cheers, thanks.